It's Friday, November 10th, 2023. We have a lot to talk about today. Please make sure to like, share, and subscribe to this channel. It really helps with the algorithm if you give this video a thumbs up. So please make sure to do that. Hit that bell notification down below so that when the latest video drops, you are notified. Let's get right into what's going on today. Dow Jones up nearly 400 points. NASDAQ up nearly 300 points. And the question is, why? And please comment down below. Tell me why the Dow Jones was up nearly 400, NASDAQ up nearly 300 points today. What was the great news? What was happening? What in the economy took place today that allowed these markets to just skyrocket today? I have no idea. But I will say this, the markets are ignoring reality. Jerome Powell just came out yesterday and told all of us that the Fed is not done. There are more rate hikes coming. But we're told that we have all these unfilled jobs, we have a very resilient economy, and these markets are just triggered by this hope, by this good news. But there's nothing behind it other than hope. They're looking for anything to prop up these markets, and the markets continue to ignore Jerome Powell and the Fed. More rate hikes are coming. The economy is not resilient. The consumer is not resilient. This is all hope. And at some point, these markets are going to figure it out, and when they do, we're going to see a huge collapse take place in these markets. Now, today, San Francisco Fed Reserve President Mary Daly says it's too early to declare victory on inflation. Well, of course it is, because we're nowhere near the 2% target. And yet markets ignore that, but they just hope that none of this is going to happen, that they just hope that there will be no rate hikes. They just hope that the economy is going to turn around. They keep telling you and I everything's fine. It's not. But they're ignoring right here the San Francisco Federal Reserve President Mary Daly, what she just said. They don't think it's over. Citadel's Ken Griffith sees high inflation lasting for decades. The founder and chief executive of Citadel and the Miami-based hedge fund says we are likely to see higher real rates, and we're likely to see higher nominal rates. This week, he told investors that they need to invest in China since it's no longer profitable to be in only U.S. companies. That does not sound very positive for the U.S. economy or the future of the U.S. But markets continue to ignore this. Here's an interesting article that I was reading today from The Hedge. And excuse me, but Nugget here wants to play with her toy. But this was an interesting article. Let me adjust that. It's titled, Has the U.S. Lost Its First World Status? Yes, it has, in my opinion. Just take a look around and you can tell me, you can tell yourself, are we still a first world nation? Cities are crumbling, they're dirty, they're crime infested. We have thousands of people in this country living in tents, sleeping on sidewalks. We have homeless people everywhere, panhandling and begging for money. We have abandoned stores all over the place. Now we have cameras all over the place, at every street corner, on the freeways, everywhere. You see cameras everywhere. Isn't that kind of weird? Food prices continuing to go up, roads crumbling, trash everywhere, graffiti everywhere. Have you noticed the amount of graffiti all over the United States? It looks disgusting. And we have millions of people dependent on the system to feed them, to take care of them, to house them. They're dependent completely on the system because many people just don't want to work. Many people don't have skills. Many people are sick. We have a very sick society. We've never had a society so sick, so dependent on pharmaceuticals, so obese, so reliant on the system to do everything for them. People are going to have to come to the realization that they're going to have to get in better shape, that they're going to have to be dependent on themselves, that they're going to have to feed themselves, that they're going to have skill sets. Because at some point the system is going to collapse, ladies and gentlemen. It's beginning to collapse right now. And if you're one of these people dependent on the system to house you, to feed you, to take care of you, you're going to be in very, very big trouble here very, very soon. Another article today coming from The Hedge. America's growing economy, brought to you by Visa and MasterCard. Everybody on the television, the analysts, the hosts, the economists, to the politician, is telling you and I that the economy just keeps chugging along, everything's fine, go out, buy a house, buy a car. And why is that? Because, well, Americans are continuing to spend money, so everything's fine. But it's clear that borrowing, it says, is the only thing sustaining the spending spree. Yes, people are spending money. It's money they don't have. It's money coming from, the little plastic cards. Money that is putting them further and further into debt. The resilient consumer is drowning under a surging tidal wave of debt. Total household debt rose by $228 billion in the third quarter, setting a new record of $17.29 trillion of household debt. Credit card balances rose by 4.7% to a record $1.08 trillion. Credit card debt spiked by $158 billion year over year. Americans paid $130 billion in interest and fees on their credit cards over the last year. Think about that. The amount now, I think the average credit card now is about 24.08% interest. If you look at a retail card, it's over 30%. There's no way people are going to be able to pay this back. Americans, now get this, this is absolutely mind-blowing. It's astonishing. Americans have blown through their savings. In August of 2021, we were at $2.1 trillion. That's what the consumer had in savings. Today, the consumer has $190 billion. From $2.1 trillion to $190 billion. So that means Americans ate away $1.9 trillion in savings in just 2 years. How long is the $190 billion going to last? We're down to $190 billion of consumer savings. How long is that going to last? I will say this. One thing we know for certain, that living on a credit card is 100% unsustainable, because at some point those credit cards are going to run out. People are going to max them out. And when the credit card company calls you up or sends you a letter and says, hey, we're shutting off your card, you're maxed out, or we're cutting your credit line in half, what are people going to do? And it's not just credit card debt. Every category of debt continues to rise. Mortgage balances grew by $126 billion from the previous quarter, now sitting at $12.4 trillion. What's going to happen when people begin to lose equity in their homes? Prices are beginning to shift. We've seen that prices have pretty much leveled off. Some areas they're coming down. Some areas have gone up a little bit. But for the most part, in most areas, prices have come down a bit. They're not going up. And they're going to come down a whole lot more. And people are going to realize that they're not so wealthy, that they're not so rich when they begin to see the equity in their homes disappear. And what's going to really be scary is for the people that borrowed money out of their homes, as they eat up, as that equity is eaten up, and on top of that, they borrowed money out of those homes. Those people are going to be so far upside down, they're never going to get out. They're going to be giving those homes back to the bank. So, again, while I'm doing this little nut here, just wanted to say hi. All right, go play. She has to play with this now while I'm filming. But getting back to reality here, ladies and gentlemen. See, Nugget doesn't have a care in the world. She has security surrounding her. She eats twice a day. She's well taken care of. She's loved. She has no worries. She gets the best medical treatment. No worries. But you and I better worry, because I don't have anybody paying my bills. I know you don't have anybody paying your bills. We better take this very, very seriously. But when you're looking at $12.4 trillion in mortgage balances and people using their homes as ATMs. And now people are losing jobs, prices are coming down. We are looking at a real estate collapse now taking place where things just aren't selling. And you're going to see less and less people qualified to buy a home. As prices come down, there's going to be less people qualified because they don't have jobs, they don't make enough money. Even with prices coming down, they're still not going to be able to afford most of these homes. And so, again, people are tapping into home equity just to make ends meet. This is going to play out really, really bad. Auto loan balances now 1.6 trillion. I've seen it as high as 1.77 trillion. Student loan debt has increased by $30 billion and stood at 1.6 trillion at the end of the third quarter. Ladies and gentlemen, please take this very, very seriously. This is no time to be taking risks. This is no time to be going into debt. You really need to be careful here. Debt is creating an illusion of prosperity and economic growth. Don't buy into it. It's not going to last. It can't last. It's absolutely impossible. It's unsustainable. And this is going to really cause a lot of havoc and chaos here in America. Be very, very careful. Bank loan volumes plunged despite huge deposit inflows. Another one on the hedge today. Deposit inflows have increased, but loan volumes have plunged. Last week, large banks saw loan volumes plunge $22.6 billion. Small banks saw loan volumes plunge $5.4 billion. This is not a good sign for the economy. This means that people are not expanding their businesses. Businesses are not growing. More than likely, businesses are not hiring people. We're not seeing newer businesses open because they cannot afford to borrow money. This is the seizing up of the U.S. economy. If businesses are not growing, if they're not opening, if we're not seeing new businesses, if they're not hiring, this means that we're just seeing things freeze up because liquidity is freezing up. So the economy is going to freeze up and there's no growth. And so if you're not hiring people, more than likely you're firing people. So not a very, very good sign. And yet they're telling us everything's doing well. Everything's going incredibly well. Everything's resilient when it is not. So I don't know how anybody with two eyes can believe what's going on. Just take a look around. A third major Burger King franchisee declares bankruptcy. You know it's bad when this junk food is not selling. When you cannot sell junk food, this is how bad it's getting. This is what happens, when you serve cold food with bad service at a high price. You go bankrupt. That's exactly what's happening. If you brought in the Burger King from the 1980s and you brought it in today, it would thrive. But this is not the Burger King from the 1980s. This is the Burger King where they heat up the patty. This is the Burger King with bad service. This is the Burger King that is overpriced. This is not the Burger King that used to flame broil those burgers right in front of you and you could smell it, a mile away. No, that Burger King doesn't exist anymore. This Burger King exists, and this is why Burger King continues to go bankrupt. Real quick note here. Those old factory jobs that we used to have where, people used to have those blue collar jobs at the factory. They don't exist anymore. Now it's all in the fast food. People are now looking at careers in fast food. The blue collar jobs are in fast food. Those jobs where people used to work when they were in high school, where college students used to work, where retirees used to work, where they just needed a little bit of pocket change, a few hours a week. They used to work in these restaurants like Burger King, McDonald's, Taco Bell. No longer. These are now career jobs. People are now depending on fast food jobs to pay their rent, to pay their car payment. It's incredible where we're living today. How in the world are we a first world nation? There's no way. That is over. 31% of millionaires say they're part of the middle class. People feel squeezed. This on CNBC today. 60% of investors with $1 million or more of investable assets said they feel more upper middle class. So 31% of millionaires say that they're part of the middle class, and 60% say that they're upper middle class. It's going to cost people a lot more now to be middle class or to stay in the middle class. Many people are going broke right now just trying to exist or trying to stay in the middle class. Just think about your HOAs are going up. Your health insurance is going up. Your auto insurance is going up. Childcare services are going up. Utilities are going up. Food is going up. Everything in your life is going up. It's not just affecting poor people. It's not just affecting middle class. It's affecting people that are worth $1 million plus. And so now that millionaire class is becoming middle class. So what happens to the middle class? The middle class is going to become more and more poor. So, I mean, this is the reality, ladies and gentlemen. I wish I had better news for you. I wish I had good news for you. But this is the reality. This is where we're at today. And this is why you need to be protecting yourself financially, protecting yourself socially, protecting yourself spiritually. I'm going to finish with this last article from the Daily Mail. Polynex crypto exchange is hit by hack, draining $125 million. If you don't hold it, you don't own it. It seems to me that the more desperate people get, the more risk they are taking. If you're solely invested electronically, if all your money is sitting somewhere electronically, you are really putting yourself at risk. You are in jeopardy that somebody can just hit a button on a keypad and your money on a screen can just disappear. Think about how vulnerable you are that somebody with a computer can steal your money. Now, if you're holding physical assets somewhere where only you know where it's at, only you have access to it, and it's physical, it's going to be much more difficult to steal than somebody that can access a digital account, press a button, and it all disappears. Be very, very diversified, ladies and gentlemen. I'm not telling you not to have any of this stuff. You should be very, very diversified. But if you're keeping all your money stored electronically or somebody has electronic access to it, you're vulnerable. So be very, very careful out there. So I want to thank everybody for tuning in. My voice is beginning to come back. Thank you very much. It's good to be back. So much happening. And as we head into the weekend, I can just say, don't be complacent. Get out there, train, get out there, put some food and water away. I see the world population has just topped 8 billion people. Where is all the food going to come from? We have so many people now in the world, and we hear more and more about food shortages. We have so many people coming to the United States of America, and yet so many people here are living on the streets. We have veterans on the streets. We have people with mental health issues on the streets. We have just good people on the streets of America. We have bad people on the streets of America who need help, but we have good people too who've lost everything. Maybe they've had some bad luck. Maybe they had medical bills. Maybe they went through some really bad stuff and they're on the streets of America and they're not getting any help. And on top of that, we have all these people coming over here who want all this help. Who's going to pay for all this? Yet, where's all the food going to come from? We keep hearing about food shortages, food shortages. The cost of food is going up. So we have over 8 billion people on planet Earth. We have millions of people coming here. We have 40 million Americans here, millions of people coming over here. Who's going to feed everybody? You have to think about food, ladies and gentlemen. So spend a little time this weekend, because my concern is that the lights are going to go out at some point, that the system is going to go down for a while, and you're not going to just be able to go to a Walmart or a Costco and get food. Make sure you take some time, go add some more food preparations, buy some more canned food, buy some emergency food, put it away while you can get it now. I don't think it's a bad investment whatsoever. You can always give it away to somebody. You can always feed somebody with it. But it's a good weekend to go out and purchase some additional food. Even if it's, $20, $30, $50, just put a little bit more in the reserves. I think it's a really smart thing to do right now. So have a good weekend. I look forward to speaking to all of you very, very soon. It's good to just talk with all of you, but it is just shocking to see what's transpiring in the markets versus what's happening to the average household right now, as they are just being destroyed by debt, by inflation, and it's going to continue to get worse. Job losses, the inequality of opportunity out there. It's going to continue. That opportunity just continues to shrink, right? There just seems to be less and less opportunity out there. So you're going to have to really be as self-sufficient as possible. And the more you know, the more skills you have, the more self-reliant and self-sufficient you can be. So I don't want to go on a tangent here all day. But do something this weekend to be productive. You don't want to just be reactive. This is the time to be proactive. Spend a couple hours this week, get in better shape, go get additional food, add to the assets, put a little capital away. Just do something proactive this weekend. This is what we need to be doing right now. We are heading into something the world has never, ever seen before. And billions, not millions, billions of people are unprepared. Don't be one of the sheep, ladies and gentlemen, because sheep get led to slaughter. You need to be a leader now. You need to be as self-sufficient as possible now. You need to take responsibility now for you and your family. Have a good weekend. Stay safe.